and AI just found a hole in the armor of quantum-safe encryption. Anthropic's security agent, Mythos, has discovered critical vulnerabilities in HAWK, a leading post-quantum algorithm, and even the decades-old AES standard. This changes everything about the race to secure our data. Horizon Quantum Holdings Limited is one of the few publicly traded pure-play quantum computing companies. On August 6, 2026, they released their Q2 financials, and the numbers are turning heads across Wall Street and Silicon Valley. The headline figure, cash and cash equivalents, jumped to $113.25 million. That's a massive war chest for a company still in its early revenue stages. The main driver? A $27.5 million capital injection from public warrant exercises, meaning investors are betting big on Horizon's future. But the cash wasn't the only story. Horizon also launched early access for its Beryllium programming language. Beryllium is designed to make quantum programming more accessible. Think of it as the Python of quantum computing. A programming language might sound boring, but it's critical. The biggest barrier to quantum adoption right now isn't hardware, it's software. Companies that can bridge the gap between quantum physicists and everyday developers will own the future. Horizon also announced a major geographical expansion, a new quantum hardware testbed in Dublin, Ireland. The system? A 256-qubit trapped ion quantum computer. Trapped ion is one of the most promising approaches because it offers high fidelity and long coherence times. 256 qubits might not sound like much compared to some competitors claiming thousands, but in trapped ion technology, quality matters more than quantity. Each qubit is more stable and less error-prone. For real-world applications, that's what counts. Now, the elephant in the room. Horizon reported a net loss of $115.23 million for Q2. That sounds alarming, but dig deeper. Most of that loss was a non-cash accounting charge related to warrant remeasurement, basically a paper loss, not actual cash burning. Operating expenses are still high: R&D, hiring top talent, building infrastructure. But Horizon's cash runway is strong. With $113 million in the bank, they can sustain operations for years without needing to raise more capital at unfavorable terms. Horizon is not alone. The entire quantum computing sector is on fire. The S&P Kensho Global Quantum Computing Technologies Index is up 69.3% in the first 5 months of 2026 alone. Compare that to the S&P 500's 10.7% gain. Quantum is outperforming by a factor of 6. Why the surge? Major tech companies like Google, IBM, and Microsoft are all racing toward quantum advantage. But Horizon is one of the few independent pure plays, giving investors direct exposure without the noise of a trillion-dollar conglomerate. The Beryllium language launch is particularly interesting. It's designed to work across different quantum hardware backends, ion traps, superconducting, photonic, making it a universal layer. If adopted, it could become the standard interface for quantum programming. Horizon is also betting on European talent and regulation. Dublin is becoming a tech hub for quantum, with government grants and a friendly regulatory environment. This move could help Horizon tap into EU research networks and defense contracts. But there are risks. Quantum computing is still years away from widespread commercial use. Clark Alexander of Argentum AI told Cointelegraph that he expects extremely limited commercial use in 2026. The hype may be ahead of reality. There's also the threat of harvest now, decrypt later attacks. Adversaries are already collecting encrypted data today, waiting for quantum computers to crack it. That's pushing governments and companies to invest in post-quantum cryptography, another tailwind for the sector. Horizon's Q2 report comes at a time when quantum investing is red hot. But analysts warn, quantum will create real winners, but there will be more losers than the current trend suggests. Picking the right horse matters. So what makes Horizon different? Their focus on trapped ion technology, a strong balance sheet, and a software-first approach with Beryllium. They're not trying to build the biggest qubit count, they're building the most usable system. The Dublin testbed is also a strategic move. Europe is investing heavily in quantum. The EU's quantum flagship program has committed over €1 billion. Horizon can leverage that ecosystem while also serving US clients. But let's talk numbers again. Horizon's revenue? They didn't break it out explicitly, but early access programs and consulting are likely generating modest revenue. The real payoff is years away, when fault-tolerant quantum computers can solve real problems. One area where quantum is already showing promise is in materials science and drug discovery. Horizon's trapped ion systems are particularly good at simulating molecular interactions, which could accelerate the development of new medicines and batteries. Another milestone, Caltech researchers recently used a neutral atom quantum simulator to directly measure conformal field theory spectra, a fundamental physics breakthrough. Horizon's trapped ion approach could contribute to similar fundamental research. The quantum computing ecosystem is also seeing progress in security. Crypto4a just achieved the world's first FIPS 140-3 Level 3 validation for a quantum-safe HSM module. That's the kind of infrastructure that will make quantum adoption safer. Back to Horizon. The warrant exercise that brought in $27.5 million is a vote of confidence. Warrants are options to buy stock at a set price. When investors exercise them, it means they believe the stock will go higher. That's a bullish signal. But the $115 million loss is real in accounting terms. Non-cash charges still affect book value. However, for growth investors, the focus is on cash burn and milestones. Horizon's cash burn rate appears manageable given their runway. The broader context, quantum computing stocks are up 69% year-to-date. Some of that is hype, but some is real progress. Horizon's Beryllium language and Dublin expansion are tangible steps. The question is whether they can execute fast enough. What about competition? IonQ and Quantinuum are also in the trapped ion space. IonQ has a market cap over $5 billion. Horizon is smaller but has a strong cash position relative to its size. The race is far from over. Horizon's management has emphasized that they're building for the long term. The Beryllium language is a bet on developer adoption. The Dublin testbed is a bet on European growth. The cash pile is a bet on surviving until quantum advantage arrives. One wildcard, post-quantum cryptography. As quantum computers advance, the need to upgrade encryption becomes urgent. Horizon could benefit from that trend, though they're focused on hardware, not security directly. Still, the tide lifts all boats. So where does Horizon Quantum stand after Q2 2026? $113 million in cash, a new programming language, a European beachhead with 256 qubits, and a net loss that's mostly accounting noise. The pieces are in place. Execution is everything. If you want to stay ahead of the quantum revolution, hit that subscribe button. We track the companies, the numbers, and the breakthroughs that matter. Next video, we'll look at why quantum-safe cryptography is suddenly a multi-billion-dollar market. Thanks for watching.